And now we'll discuss SA530 audit sampling. As always, we'll go and discuss the first objectives of the auditor. The objective of the auditor when doing audit sampling is to provide a reasonable basis to draw conclusion on the population on which sample was selected. You see, the audit procedures and the audit sampling was done on a sample. But what he's doing, he's obtaining a reasonable basis. He's obtaining conclusions about the population as per a reasonable basis. So that is he's forming an opinion on whole population while auditing the some samples. And this is a definition of audit sampling, that is application of audit procedure to less than 100% of items within the population. And they have the samples have a chance of selection. Every sample has a chance of selection, and they provide a reasonable basis to draw the conclusions on the entire population. This is the key phrase that you have to use in this standard 530. Sampling risk, this is the definition of sampling risk. The risk that the auditor's conclusion based on a sample may be different from the conclusion if had done the entire population. That is, he had got some conclusions by auditing a sample, but there's a risk that his opinion might change when he audits the entire population. That is what the sampling risk talks about. There were two types of sampling risk. First one is, that is, he had been more on a positive side. That is, the controls were not that effective, but he thinks they were more effective than they actually are. And while doing tests of details, he found that there were no material misstatement, but in fact there were actually as. That's the first one. Second thing, he's been more pessimist, he's been more negative. That the test of controls, the controls are less effective than they were actually are. And in case of test of details, the material misstatement exists when they're actually not. These were two sampling risks that the author might have. And anomaly is the definition of anomaly, which is a misstatement or deviation. Misstatement with regards to financial information on a statement or assertion. Deviation with regards to the internal controls, that is demonstrably not representative of a misstatement or a deviation in a population. Normally means a deviation, or that's something that was unexpected while auditing samples. That's not need not be a misstatement or a deviation in the population. And these all the four statements with regard for definition: statistical sampling, stratification, tolerable misstatement, and tolerable rate of deviation has to be read. You have to rewrite that things. You have to know these four definitions before going to the examination. An approach to sampling that has following characteristic. What does statistical sampling has? They use probability theory to evaluate sample results. The samples have some results, right? They will use probability theory in order to ascertain that if they have what like they have you taken 20% of the population as samples, and they have got some like one misstatement for the 20%, and by using of popular probability theory, as for the 100% there were total five misstatements that would be happen. So they use probability theory, that's a statistical sampling, include measurement of the sampling risk. Okay, and they use random selection of sample items. They have to use sample items and use probability theory. This is what a statistical sampling is. If anything, these do not comply, that's a non-statistical sampling. Stratification is just by dividing the population into groups having similar characteristics. Okay, like a tolerable misstatement. Tolerable misstatement is that monetary amount that the auditor is willing to accept as a misstatement in his audit procedures, etc. Willing to accept that. Tolerable rate of deviation is such that that particular deviation that the auditor is willing to accept in the internal controls. Tolerable misstatement, something that's related to the financial information, and something that was related to the internal controls is rate of deviation. Okay. Monetary amount set by auditor in respect of which auditor seeks to obtain an appropriate level of assurance that the monetary amount set by the auditor is not exceeded by the actual misstatement. And the tolerable rate of deviation is the rate of deviation from the prescribed internal controls set by the auditors, in respect of which auditor seeks to obtain an appropriate level of assurance that the rate of deviation set by the auditor not exceeded by the actual rate of deviation in the population. Okay, these were the tolerable. The auditor is tolerable in this amount of misstatement and this rate of deviation with regards to internal control. And with that said, we'll just move on to the SA 513. Non-sampling risk. Non-sampling risk is that type of risk that it's not due to the risk that was not due to the sampling, that was with regards to something other else. That is with regards to the audit procedure, the auditor might have found, or misinterpretation of the audit evidence, or failure to recognize a misstatement, or any other reasons other than sampling. That is, you see, when the sampling risk was there, what's the sampling risk? Sampling risk is that auditor's conclusion would be different if he had done the population entirely. Okay, that is not through the not because of the sampling units. The risk is not due to the sampling units. It is because of the audit procedures or interpretation of the things, etc. And misinterpretation of the audit evidence and failure to recognize some misstatement or deviation, and the auditor reaches a erroneous conclusion for any reason that was not a sampling risk. Auditor shall evaluate the results of the sample and whether the use of audit sampling has been provided a reasonable basis for the conclusions about the population that has been tested. These were all objectives of the auditor. What are reasonable conclusions were not reached with audit sampling? If the auditor concludes that audit sampling has not provided reasonable basis for conclusion about the population, you see what we are saying, auditor will apply audit procedures on few samples, selected samples, and obtain a conclusion on the population. Now he is not getting reasonable conclusions with regards to population. Then what auditor could do? Auditor could request the management to investigate misstatements that have been identified and potential for the further misstatements, that he had already found few misstatements, and he requesting the management to further investigate for the further misstatements and tailor means modify the nature, timing, and extent of the further audit procedures, which also we have discussed in the objectives of the auditor. And auditor shall determine a sample size sufficient to reduce the sampling risk to an acceptably low level. You see, one for 100%, when the risk of misstatements were high, he cannot go for 2%, 3% of sample size. He have to do almost 40% to 60% of the sample size, right? So they are talking about the sample size have to be sufficient with regards to the quantity. Select items for the sample in which by way each sampling unit in the population has a chance of selection. And audit procedure is not applicable to the selected item. Perform the procedures on a replacement item. If the audit procedures that were made by the auditor were not applicable to a few selected items, like few selected where the risk of material misstatement was high and few important parties, etc., then what he has to do, he has to perform the procedure on a replacement item, and he has to replace that to the another item. And unable to apply the designed audit procedures, treat that item as a deviation from the prescribed control in case of test of control, or a misstatement in case of test of details. If he is unable to apply the audit procedures, that could be a test of deviation from test of controls, or a misstatement from the test of details. To use a statistical or a non-statistical sampling approach is a matter for auditor's judgment. Sample size is not a valid criteria to distinguish between the statistical and non-statistical approach. You see, there will be no question with regards to all these 4 points. Uh, it is just for the common understanding purpose, just to know it is there. And stratification and value weighted selection. Stratifications were a group of having similar characteristics. and value weighted items were with regards to only particular monetary limit, etc. We'll see the difference between stratification and value weighted selection. Stratification is when performing tests of details, the population is often stratified by monetary value. This allows the greater audit effort to be directed to a larger value items, and these items may contain greatest potential misstatements in terms of overstatement. You see, all the large value items here have been divided or have been created as a group. So this is what stratification was. There's a quality involves there. When performing tests of details, it may be efficient to identify the sampling unit as an individual monetary unit that make up population, having selected specific monetary units from within the population. This is with regards to the value weighted selection. Now we'll see an example like this. You see, all these were like debtors balance, if you guess it as a debtor balance, and we are picking up samples from $100 to $25,000. You see, customer 6 is having $950 thing, and customer 20 is having 25,000. That was nearer to 25,000. What happens in a value weighted sampling is that customer 6 has lesser number of chances than customer 20, because the monetary amount which is higher has a higher chance to be picked up as a sampling unit. And that's it. That is what the only thing that's the difference between stratification and a value weighted selection. That is, more the value of that particular population or that particular sample has, it has more chance of being selected as a sample. Whereas stratification is all the large value items was categorized and grouped and together, and they were selected. We are making a group, and here we are randomly selecting from a particular monetary range, and for that the random selection is more the weights, more the amount was higher to the more weight the monetary limit was, it had more chance to be selected, and that's the difference between that. And with regards to the methods of selecting samples, it's a random selection and systematic selection, like a size. You give a particular sampling interval. For example, you have determined a starting point for the 50, and each 50th unit will be selected thereof. The systematic sampling and a block selection were mostly similar, but here we select only one particular thing. But in block, we select a particular block of items. In our keyword kit series, we have discussed all the difference between the block sampling and cluster sampling and all. Please go and check there. And the monetary unit sampling is same as value weighted selection. The in the entire population, the items that have higher value have more prone to get selected as a sample. Haphazard sampling is objectivity by the auditor. And with regards to this sampling size, I will just see this here. Sampling size of tests of details and sampling size with regards to tests of control. When there's an increase in risk of risk assessment, obviously sample size increases. An increase in tolerable rate of deviation, sampling size decreases. That is, tolerable rate of deviation is something the auditor is accepting to be wrong. So that's why the sampling size would decrease. And an increase in the expected rate of deviation, then sampling size would increase. That is, again, the risk was being higher. An increase in the auditor's desired level of assurance. You want more assurance, more sampling size. This is with regard to the sufficiency. And an increase in the number of sampling units in the population, it has a negligible effect on the sampling size. Okay. Now, with regards to the, this was even tested in the MCQ, that's negligible effect. Don't skip this part. Do remember this. Do check out just 1 hour before the examination. It's an important part. Sample size, or you may take a screenshot of it. Sample size of test of details is that with regards to increase in risk assessment, sampling size would increase. An increase in use of substantive procedures at same assertion. Then you see, you are applying more procedures, means you are increasing the quality. So the sampling size could decrease. An increase in the auditor's desired level of assurance. its desired level of, if we wanted to increase his assurance, sampling size would increase. An increase in tolerable misstatement, you know the answer, sampling size decreases because he is willing to accept a lot of misstatements to be in his work. And an increase in the misstatement, the auditor expects there is a chance of risk, so their sampling size would increase. Stratification of population when appropriate, then sampling size decreases. Stratification is what, like, they were using stratification means they are pulling up, they're grouping the things. So obviously size would decrease as they are eliminating all the unnecessary part. The number of sampling units in the population has a negligible effect. The number of units with regards to population has always a negligible effect. And that's with regards to 530. And that's it. We have completed our essay 530.